Hey guys, Boris House from BK Forex. Welcome to our Forex Daily Technicals for 11/6/13. As always, trading foreign exchange on margin carries a high level risk and not suitable for all investors. I ask you to read this disclaimer very carefully to understand all the risks associated with trading on margin. Seek advice from an independent financial advisor if you have any doubts. All right, well, let's take a look at the charts here today. A relatively quiet day. We held the key levels in pretty much all the anti-dollars, all the high beta currencies. Euro definitely held the 34.50s today, second day in a row. This is one of those interesting situations where if we get 3 days in a row of a hold, the probability of a turn now becomes much greater as the euro starts to break out. So in many ways, I think the consolidation here continues, and the critical question is going to be whether this 34.50 level remains a key support level. 34.40, 34.50, sort of right in that range, is going to be the key support level for the euro going into tomorrow. So is this a pause that refreshes where we can have a drop down to the 33s? Very much possible. But in order to do that, really have to give up this 34.40. That opens up the run to 3400s and then possibly all the way out to 33s on the break. Conversely, if this holds, the upside here is 36. So that's sort of the retrace level that everybody's going to be looking at on a potential euro retrace level. As far as let's take a look at Aussie next because sort of a very similar construct. Aussie holding a little better. 95 is the equilibrium level here. 95.50 is the big resistance level to the top side. 94.50 has been a very good support level. And again, kind of a similar type of situation. We have 3 days by 50 where we're kind of holding off and not making any fresh lows here. The low here, 94.17, was 2 or 3 days ago. Since then, we've basically been just holding right above 94.50. We can hold that for another day. The chances of another base for a move towards 96 really start to grow exponentially. If we start giving up 94.50 to the downside, that does open up a very, very strong run towards 94 support. But having come back down, though, this 94 seems to be like pretty serious support. So it's not like you can see much further downdraft beyond 94 on the downside. Dollar yen, kind of really interesting because we probed 98 a couple days ago. We've been sort of really riding very, very tight between this 98.60, 98.20 level for the last couple of days. The key thing that you keep seeing in dollar yen that I think is the most important thing in terms of keeping your eye on the ball is we're continuing to make higher lows. We're continuing buying up the pair, and it's certainly building up momentum for this big burst through the 99s because a burst through 99 does open up a much stronger upward move towards the key 100 level. So as long as we can maintain this kind of trajectory, dollar yen still looks more like a buy than a sell. Every dip is a buy, unless we start breaking 98s. If we start breaking 98s, then this turns back into a lower high and a much more negative construct, with 97 then becomes a next support level. For the near term, though, if we can just take out 99s on the close tonight, that would be a very, very bullish construct for dollar yen. And the last pair, which had the best performance today, pound dollar, good data. Have a little bit more data tomorrow on the pound, which could potentially give us another boost higher. 61 is the key resist here. That's going to be the really, really big resist to the top side. 60 now becomes the much more immediate term support, whereas 59 was a big support a couple of days ago. And for the time being, it's clearly held a base here around the 59s for the last basically since the start of October, and therefore the recovery here looks to be at least a 61. And of course, 62 becomes a big resist level if we can get beyond that. So dollar yen looks, pound dollar looks moderately positive, and we see a little bit of a further flow. One interesting, one other thing there's two things I wanted to take a look at. One was Kiwi trading well, and I guess Kiwi just had news, so Kiwi just blew through the 83.50 level here on the labor data. Must be pretty good labor data. So now 84 becomes the big resist level for the Kiwi. This actually also sets up the look for Kiwi yen, which looks quite good here. Let me just see the Kiwi yen. Kiwi yen looks pretty decent here, and certainly looks 83 in tow on the yen crosses. But the yen cross that looks best in terms of where's my thing here? Where is it? Here it is. The yen cross that looks best to me in terms of sort of potential upside here is the pound yen, because I think if we get a rally in dollar yen, pound really doesn't really decline, and you have a chance here to try to test the 59s to the upside. Today was a very bullish candle. Look at this big hammer candle that it made, and ending pretty much on the highs of the day. So gotta like this, especially if you can take out this all of this resist level around 58.40 or so. Gotta like it to 59 on any kind of a positive yen cross move. That's pretty much how it shapes up for the day. Wishing you guys the best of luck, the best of trading for tomorrow. That's going to be the quiet day before we get into the very heavy duty Thursday, Friday, as a lot of event risk comes on board then. Talk to you then. Boris Stossberg, BK Forex, over and out.